I have been quite surprised at how resilient our economies have been, and that has been the case in Europe. So we feared the worst, and we had the bad, but it wasn't as bad as we had anticipated. In terms of growth, inflation, employment, I think that the economies have been very resilient and much more so than we had anticipated.
How are tariffs affecting Europe's economy?
Well, there is the direct impact and the indirect impact. In terms of direct impact, Europe has 17% of its trade with the United States. So it is the largest partner, but it's not a massive amount of trade that we do with the US. So it does impact, and tariffs between the United States and Europe have gone from 1.5% to 13%. So that's a serious add-on which has to be borne by someone, either the exporter, the importer, or the consumer. And the indications we have is that it's, at the moment, borne a third, a third, a third. And we'll see how that goes, because clearly the exporters and the importers are squeezing their margins in order to absorb this additional tariff.
So what you've said lately at the latest policy meeting is that you think monetary policy is in a good place. You stopped cutting.
I think we are generally in a good place. So inflation is in a good place because we are at around 2%. We were at 2% on, really on the dot for 3 months. It went a little bit up in September. But I would say that the whole economy is in a good place. We upgraded our activity forecast. Unemployment is at rock bottom. Employment participation is up. And I would say that our monetary policy has done the job. We brought inflation back from the highest we had, 10.6%, back 2 years ago, down to 2%. So we have a 2% interest rate at the moment, and we are positioned to respond just in case, because while we are in that good place, things can happen. There can be shocks, there can be good developments, less good developments, and I think we are well positioned to respond to those potential shocks. Remember, we always target medium-term inflation, and the latest reading is good. The medium-term inflation is looking good as well.
So you've done the job on inflation. Does that mean you're done cutting for now?
I would never say that, because I think the job of a central banker is never done. So we tamed inflation so far. We are in a good place, as I said, but we have to anticipate anything happening. If we learned one lesson in the last year, is that we have uncertainty. Entrepreneurs, corporates deal with uncertainty, but we have to deal with uncertainty. And this is something that models cannot necessarily predict with perfection, far from it. So we need to anticipate political development, geopolitical changes, the shift in global order as we have seen it, to understand how it impacts our world and our monetary policy.
How high is the bar for cutting now? What would make you do that?
I cannot say.
I'm trying.
I know you're trying very well, but no, it's as I repeatedly said, we are deciding meeting by meeting. We are data dependent. But when I say data dependent, we're looking at everything. We're looking at what the models produce. We're looking at what the empirical data reveal. We are applying some judgment as well to, as I said, capture some of the elements that are not easily captured by models.
So on the economic growth outlook, is it to the upside or downside right now? Where do you see the bigger risk?
I would say that it is more balanced than it was, and more so because some of the fears that we had in terms of, if you look at tariffs, we anticipated that there could be retaliation. There has not been retaliation by Europe, right? Uncertainty has abated. It's not back to where it was in, pre-COVID, but it has abated significantly. And on the exchange rate front, we had anticipated that the euro would depreciate.
Went up a lot.
And it went up. It's in flux on a daily basis, but we did not have any of those risks materializing as we had anticipated. There are risks to the downside as well, supply chain disruption, additional trade disruption, and the current days are not showing us complete stability, but the risks are much more balanced than they were.
What about the risk to inflation now?
again, we have both upside and downside risk to inflation, and we are monitoring very carefully where that balance stands. But I would say that it's fairly balanced at the moment.
You said that we don't necessarily have stability on the trade front. So the latest is tit for tat, U.S. China. How does that impact Europe? Do you find yourself in the middle when the U.S. and China go at it on trade?
There are direct and indirect impacts. Direct impacts is this business on rare earth and magnets. That impacts all countries in the world because there is no differentiation by China. China doesn't say it's directed at the US. It says it's directed at everybody.
Right. Europe needs
and of course, we import rare earth. We import, those products on which China has gently, over the course of time, built that super competitive position. So that's the direct impact, where licensing, export restrictions are going to apply to Europe as much as it will apply to the United States. The indirect impact could be supply chain disruptions, and that we have not so far seen very much of that, but we have to remain attentive. And the final factor that sort of compounds everything is the level of uncertainty. When we hear leaders in that sort of tit-for-tat escalation until they eventually meet, which I'm glad they will, that raises the level of uncertainty, which obviously leads to apprehension on the part of corporate decision makers, on the part of employers, on the part of everybody, consumers as well. And you see savings go up as a result.
What do you want to see between the U.S. and China on trade?
I would like some certainty. I think that's what the economic actors, players need. They want to know where they stand now and in the future. Because when you decide to set up a factory somewhere, when you decide to buy a new ship, when you decide to identify the line of shipping for your products, you want to know what the reality of tariffs will be going forward. My hope is that there is enough open trade with the tariff restrictions that the two countries will decide, so that the movement of trade and goods can continue in a reasonably balanced way. My concern is that if there is too much restriction in that line of trade between China and the US, a lot of the goods that would naturally go to the US will be diverted somewhere else, diverted to Central and Eastern Asia, but diverted to Europe as well, and that would have consequences for inflation.
We saw in the recent data, export data from China, Europe grew, Africa grew more than 50%. So is Europe doing more trade with China now?
The movement of goods has increased, yes.
Is that a good thing?
Not to the extent that we had feared again, but it has increased, and that's what we had anticipated.
I mean, it's tricky.
In our forecast.
It's tricky for Europe because, for instance, China's building all these factories for its EV plants in Europe, but then that crowds out some of the European automakers.
Well, I don't think that it's building all these EV plants. There are a couple of countries where EV plants are being built, but we are seeing the world over some of those Chinese brands and Chinese-made EVs being marketed and sold. Yes.
I mean, do you have security concerns, intellectual property concerns?
Of course. I mean,
dumping.
I think any trading partner has those concerns with all its trading partners. I've been a lawyer for 25 years of my life, and I know how intellectual property can be, gradually eroded, taken over, and a new factory suddenly pops up, which is based on that intellectual property. So I think that anyone in the trade who has security concern, intellectual property concern, is going to have to be on its guard, whatever the trading partner.
Do you worry about geopolitical implications, ripple effects of the tariff policies?
I think the tariff policies in and of themselves are going to create a readjustment, some supply chain modifications. And, I don't know what is causing the other. I'm not sure that it is tariffs that will have an impact on geopolitics. I think it's more geopolitics that is deciding tariffs.
In other words, Europe is such a strong friend and ally for the United States. Do tariffs change anything on that front?
It changes things in the sense that a stable, well-anticipated relationship has been deteriorating, let's face it. I believe that partners are strong enough and have sufficiently long history of support, partnership and friendship so that that can be overcome and a stable situation can be agreed. I think there are imbalances that needed to be discussed and will be discussed whether in the G7 or during these IMF meetings. But equally, I think that a predictable relationship is necessary to restore the quality of this friendship and partnership that has been built for 2.5 centuries.
Did Europe give up too much in the latest trade negotiation? There's a deal on the table where Europe invests a lot, over $1 trillion in the U.S., and now pays 15% tariffs to sell into the U.S.
Look, I'm not going to characterize or pass judgment. What has happened, and now we deal with the economic consequences of it, and we have to do the best we can in terms of policies, and that's what I'm doing.
But it sounds like it's changed your attitude a little bit.
No, I'm still in love with this country, but I hope that we can settle the relationship on good terms that are based on trust, predictability, and reciprocated consideration.